Hello, crypto traders. This is Stefan speaking. Today we are going to have a lesson over the fundamentals of BTC. So this is one of the fundamental lessons where we're basically just going to look at the origin of Bitcoin, go all the way through it, and just talk about things about Bitcoin, such as the halving, what that is, what mining is in Bitcoin, talk about SHA-256, and just the history of Bitcoin. So let's go ahead and get started. So first of all, the history of Bitcoin. Cryptocurrency backs to before World War II. The NSA created cryptography to solve German Enigma machine. There's a movie about this called The Imitation Game, which is really cool. I would definitely recommend watching it. You can see the origin of cryptocurrency. Years before BTC was created, there was some groundwork in 1982. Chom published a paper titled Blind Signatures for Untraceable Payments. Chom started a company called DigiCash, which ended up getting some traction but went bankrupt. Then in 1997, about 15 years later, Adam Back invented his cash, which was a proof of work similar to what BTC uses today. And then in 1998, two other projects arose that never came into fruition that were like BTC, B Money and BitGold. So before 2009, digital assets included music files, digital photos, videos, websites, basically everything that is in a binary format and has value to a customer. In 2009, BTC emerged, which provided the infrastructure to own and exchange digital assets and other cryptocurrencies. So now 2008 came, BTC start origin, and there was augustbitcoin.org, and that was in August, and it was registered 2 months later. The white paper was published, the Bitcoin peer-to-peer electronic cash system, secure digital signatures, not requiring use of third party, proof of work, hashtag the transactions to form a chain. And we'll talk a little bit more about this later on, but you can still read this today, the peer-to-peer electronic cash system. So the creator is Satoshi Nakamoto. It is an unknown pseudonym for an unknown group of people who wrote the BTC paper. There is a lot of wondering of who this actually is. If we know where the origins of cryptography started from, the U.S. government, you could then surmise that maybe higher ups in the U.S. government or maybe big business. Who really knows? But it is an unknown group of people as of right now. So a few days in 2009, the Genesis block, the very beginning, first ever BTC transaction was January 12th, the first version of the software. In October 2009, the first BTC exchange rate $1 to be 1,309 Bitcoin. So in October 2009, $1 get you almost 1,300 Bitcoin. The second version of the software was the end of 2009. And then in May of 2010, a Florida-based programmer paid $25 for 2 pizzas with 10,000 Bitcoin. At this point, BTC was still less than a penny, but by the end of the year, price broke 1 cent. BTC exchanges in 2010, Bitcoin market in February, and Mt. Gox in July. So all this happened in 2010. Slush was the first mining pool. By November 2010, the market cap surpassed 1 million USD. First major event was a hacker spotted a vulnerability in BTC protocol that didn't require proper verification and exploited it, generating 184 billion BTC. The transaction was erased and correlated vulnerability was fixed. And then in February 2011, Bitcoin surpassed $1 finally. And good and bad publicity, but really any publicity is good publicity, at this time at least. Two significant articles was the Times Magazine and the Gawker, which posted about the Silk Road and the dark web. Which, if you are interested in these things, there's a lot of further information and stuff that you can look back, but it's kind of the history now. I mean, I guess there's still some dark web now. And then by June, Bitcoin was over $30. Soon crashed back to 10, kind of like uptrends and downtrends. Also in June, Mt. Gox had a security breach, which was the largest exchange at the time, which compromised tens of thousands of BTC, first of many issues with Mt. Gox. BTC was growing, and the first altcoins emerged, whose developers tried to improve upon BTC and create a coin for different purposes. 2011 was a crazy year. 2012 was smoother. 2012, BTC crossed $100 in April. 2013, BTC price surpassed $1,000, becoming the most recognizable and successful wallet in the cryptocurrency space. 2014 through 2016, so January of 2014, BTC fell to 1,000. Mt. Gox went bankrupt, and shutting down this period was a time of failure to break highs and saw massive volatility. So the largest exchange going bankrupt and shutting down caused massive volatility and never was able to break highs over a 2-year period. Whereas before it was, broke 1,000 when it was less than a penny from 2009 to 2013. 2017 was the biggest year for BTC. By June, BTC passed $3,000. Frustrations with the network time and higher fees, wanting a bigger block size. In August, Bitcoin Cash hard fork was created via fork in the network on Bitcoin's network. By October, BTC reached 6,000. November was nearly at 10K, and at the end of December, BTC peaked just under 20K. We'll just say 20K. And when Bitcoin Cash came out, then that was a really crazy time as well. Bitcoin, this is the thing about Bitcoin. Bitcoin Cash is a hard fork off of Bitcoin, such as Litecoin, Doge, and a bunch more. But this was the recent hard fork at the time. In 2018, many people sold BTC that could, and price saw a drop of 67% to $6,500 by December, reaching 3K levels. So 2018 through 2020 was the cryptocurrency and BTC had grown in popularity and adoption, with many people's mindset changing more towards acceptance. Then in March of 2020, the pandemic drop, which brought BTC price back to 3,000 and jump-started the largest bull market in BTC history when it comes to a price point, maybe not a percentage-wise. There's also other things that happened. These are just a few major events. But I'll mention a few after this. October 2020, PayPal announced that they would allow customers to buy and sell Bitcoin, but not deposit or withdraw. June 2021, El Salvador announced plans to adopt Bitcoin as the legal tender, which made them the first country to do so. They made BTC a legal tender, with US dollar being the other. Major adoption across the board. Coming into today's date, with institutions and large corporations such as Super Bowl ads, largest event stadiums in the U.S. being named after the largest American crypto companies. And then another recent event that happened was the whole thing with Sam Fried SFB or whatever, with that large exchange and the fraud and all that, causing the cascading continuation down from this bear market. So after this bull, so that's like recent history in the last year. So that can be something that if you haven't experienced it recently and you're that new, you can do your research on that. So that's just a brief synopsis of the history of Bitcoin. So now we're going to talk about what BTC halving is. So halving is an event that halves the rate at which Bitcoin is created. Once every 4 years, the halving occurs, roughly. 21 million supply is the finite supply, reference to gold. There's 18 million BTC in circulation, and I believe this was back in 2018, so it might even be closer to 19 million now, but roughly 85% of the total cap. Every 210,000 blocks equals 4 years, a halving occurs. Miners receive 50% fewer Bitcoin for verifying transactions after each halving. So after each halving, it gets decreased, right? So if it was 12, then it goes down to 6, right? And then so on and so forth, 3. But that's just how the halvings work. So you get less and less Bitcoin for the verifying of transactions. So the block reward blockchain is a digital ledger that stores information about transactions in blocks that are each about 1 megabyte in size. When Bitcoin is sent from point A to B, the transaction is stored on a block with around 500 other transactions that happened at the same time within a 10-minute block. And then block reward is the amount of cryptocurrency miners receive when they successfully validate / mine a new block by solving highly complex mathematical problems with mining hardware. Reward for hard work. So that's what the proof of work system is. BTC was launched in 2009. Miners received 50 Bitcoin per block. So 10,000 or 10,500,000 BTC was generated before halving took place in November 2012 to 25 Bitcoin per block. In June of 2011, BTC hit $31 per Bitcoin, an all-time high market price, before year's end price was back to 2. Mining in turn was much more profitable for early adopters, one reason why BTC critics called it a Ponzi scheme. Second BTC halving occurred on July 6, 2016 at block number 420,000 miners collected 12.5 Bitcoin. It went from 50 to 25 to 12.5, which is the current rate after the halving that occurred on May 12th that took place. So there is another halving that occurred, and it's actually now at 3. Is that correct? Or no, the next halving has not occurred. So the one that brought it to 6.25 was May 12th of 2020, I believe. Yeah, so it's 4 years later. And so the next one will be happening roughly in 2024. Dates are not 100% on halvings because time to generate near blocks speeds up and slows down. On average, network produces 1 block every 10 minutes. Historically, BTC price has gone up after a halving, but depends on the supply and demand. Because when a halving occurs, there's less supply. So if the demand's increasing with less supply being added, then that's what causes the ups and downs. Historically, right? It doesn't mean it will always be like that. The last halving happened on May 11th, 2020, which sparked price to peak at 65K from lows of 3K at the beginning of the year. 6.25, which is the current rate for block rewards. The next halving is estimated to occur in 2024, roughly around March 26th of 2024. So we are about 1 year away from that event. And remember, a lot of times price starts to factor in before, because we know that the bull market, at this point was already in full starting force. By May, I think it was already at like 12 to 20K range, whenever it hit 3K in March. So just in a few months. The last halving expected to occur in the year 2140 as the 21 million BTC is mined. Once that happens, miners will no longer receive block rewards, but keep fees paid by the transactions. So they get fees paid by the transactions, and at that time, if Bitcoin is, say, 200K, 2 million, whatever, the fees will be very tremendous. Okay, so BTC mining. Majority of BTC mining is performed by giants like Bitmain, the Chinese-based company that was valued at 12 billion in 2018. Bitmain validates, and this was in 2018. If you followed it recently, this got closed down, and there's no mining in China at all now, at least not on a government scale. Bitmain validates blocks with thousands of high energy consuming machines called application specific integrated miners. They're like ASIC miners, is what they're called. As the block reward becomes less significant, mining rigs that barely cover production costs will be forced to leave the market due to cost reasons. Some smaller players might be forced to leave or upgrade their software and hardware. The market could become less decentralized as a result. Still, new, more efficient ways to mine BTC could emerge, enabling smaller businesses to take place. So, I mean, it's just constant. Like every 3 months, there's a new miner coming out, with a faster hash rate. And I mean, you can do a lot of research on it to really be profitable in it. One, you just have to sell it in bull market conditions after you've been mining throughout all conditions, bear market or bull market. But two is really you need a larger scale investment to have multiple miners, and you kind of just have to understand that it's an investment and you're kind of biting the bullet for a while when prices are in bear market conditions a lot of times, and then in bull market conditions is when you sell for the payout for your investment. Electricity is the biggest overhead of mining operations. A single Ethereum transaction consumes 53 kilowatts. This was in 2018, 2020. So for comparison, a washer and dryer uses 300 kilowatts a year on average. So 6 ETH transactions can power a washer for a year. Around 300,000 transaction happens are done daily. That's a lot of electricity. BTC is even more energy hungry than ETH. So without cryptography, BTC loses one of its core benefits, security. A miner's computer spits out hashes, megahashes, gigahashes, and terahashes. 1 petahash is 1 quadrillion. Solving the complex algorithms to decipher cryptography requires enormous amounts of electricity. Using and finding a source of power that is renewable and doesn't leave a huge carbon footprint is critical for mining operations. Example, hydropower, most effective and low cost. Renewable energy source. It is environmentally friendly, carbon-free, and natural. So difficulty level pertains to 1 and whatever the difficulty level is. Example, 1 in 16 trillion chance on first try. SHA-256, developed by the NSA, released free public license, takes in an equation and spits out 256 bits. Never has it been back engineered, and small changes in input causes big changes in output. Hash power is the total computing power of the network. Difficulty changes every 2 weeks depending on hash power of the network. So the higher the hash power, the more difficult it gets. The lower that total network hash power, the lower the difficulty gets. And the more difficult it is, the harder the miners have to work to solve the problems. The miners must solve a proof of work, producing a 64-digit hexadecimal number. How many hashes can be achieved is by the computational power, faster hash rate. Eventually, the number of transactions in 10 minutes will exceed the number that can be processed in a 10-minute transaction, and it will continue to get longer. Example, in 2017, when the Bitcoin, the number well exceeded and the blockchain got really backed up, and it caused a lot of issues. And that's when Bitcoin Cash hard fork happened, where it was like 4 times larger block sizes, 4 times faster for transaction fees, 4 times cheaper, and it was just a bunch of stuff. So that's the reason for Bitcoin Cash originally. Mining possibilities doesn't matter how much money you have, depends on computational power. So before we go into that really quickly, I want to show the SHA-256. So here you can put anything, right? So we're going to say, hello, crypto traders, right? And we can see it starts with 8FCE8 and then ends with 71C3F. Now let's add 1 exclamation point, and it changes the entire 64-digit decimal there. So you can see why it's really hard to hack, and you can see that there's all different types of hashes and different types. Bitcoin is on SHA-256. I believe that not even SHA-52 has been hacked. So imagine SHA-256 being hacked, meaning coming in from the backside of it. So yeah, continuing on Bitcoin mining. This is like a standard block. So you have the version, the previous block hash, the Merkle root, the timestamp, the difficulty target, and the nonce. Target is to meet or go below the hashed target value. Nonce is increased in increments of 1 until the target is reached. So it just goes up 1 at a time. Thus, a valid proof of work. Node single valid proof of work and add the block to the blockchain. The Merkle root is to save the disk space to keep the blockchain size down. And probability decreases of finding a nonce data-wise as small as 0.0001, so down to like the millionth or 100,000th, and it just depending on the difficulty target. If it's really high, then the nonces can go much lower. And then if it's lower, the nonce can actually decrease, and it can become a higher chance of finding it out. That it's solving. 51% of the hash power of the blockchain can change transactional info or even block transactions. So if one miner had 51%, they can change transactional info, which is an interesting concept. So that is the lesson over fundamentals of Bitcoin. If you liked it, please give it a thumbs up and subscribe. If you are not new to crypto traders and you'd like to join our community, the Discord link is at the bottom of the video. And please put any comments of things that you liked or things that were interesting or things that you think that would be cool to add. I would really appreciate it. Thanks, guys, and keep trying to learn everything you can, and good luck in your trading.